All right, so stocks started the week strong, especially in this really beaten up technical sector. The question is, was that just a technical bounce, right? More so, or was it a change in sentiment? And so we're going to take a look at its technicals to see what the rally looked like in context of the moves that it's been making, and what we can expect to see from those large cap tech names that we expect to be the market leadership. Are they leading us on a new run? Or was it just an oversold bounce? And we're still going to get the exhale and everything else that has been so strong up until now. So I'm going to break all that down in today's video from a technical perspective, of course. We're going to take a look at what's driving a lot of this moves today. Some pretty significant, some interesting moves, especially from the bond market. So we'll take a look at that. And then our trade ideas in a stock that's very popular, very big name. It's been on a very strong trend. It's starting to mature in that intermediate run that it's on and start to flatten out a little bit. So we'll talk about how to trade that. Let's go ahead and get started. Today is Monday, March the 22nd, 2021. This is the Market Outlook from MarketScholars.com. My name is David Settle. All right, well, let's start off taking a look at the S&P 500 with the market forecast indicator. There's our nice little bounce back rally that we had. But remember, again, anything between 0 and 23% is just noise. We still haven't had our exhale, even though our trend has progressively gotten weaker and weaker, right? You can see the strength of the trend was right there. That's the peak of the ADX. Since that point, we have really just kind of gone sideways. The ADX has not only fallen below 20, but it's fallen below 15. It's at a pretty significant low point here, and the negative directional index, this purple line, has gotten above 20 and has been kind of flirting with just barely dropping below 25. And the positive, we even went down today. Still can't really get going and get going back up. You can see when you're bullish, the positive index is up here and the negative index is down there. But we don't have that right now. We don't have that on the S&P 500. So we still do maintain a bullish posture, strong bullish posture. The intermediate line's above 80. Doesn't matter that it's falling; it's above 80. Market sentiment's falling, which means again probably that we are in this mature intermediate run that's been going on since November the 5th. So we are going now on, December, January, February, March, going on 5 months. This will be almost 5 months long, coming off of another intermediate run that lasted quite a while. We got above. This eventually turned into one, but it started over here on April the 13th, and we pulled back by September the 13th. We were to the point where we started the pullback. So 5 month long run there, 5 month long run here. So separated by about the weakest intermediate pullback that we could have. So very, very strong, very mature. Needless to say, we are on a very mature run. We're hardly starting. This is hardly a correction. This was hardly the end of a correction. It was even an exhale. It was almost an exhale, but it was basically just noise. And we continue to have noise, and it's getting more and more sideways, more and more flat. You can see that the short-term sentiment. Let's see, short-term sentiment on the S&P falling. Near-term lines down below 50, but not down to the lower reversal zone. We didn't get extremely low on Friday. You look at the Russell 2000. It did get to a pretty significant low. It didn't quite get below the 5th percentile where you're extreme, but it did drop low enough again today that the near-term line has gone down. See, that's the lowest near-term level that we've had since this little pullback that we had here. And remember, this is where the intermediate run started for everybody, and the Russell started a little bit earlier with that little brief pullback there. So the worst near-term drop that we've had in a while from a short-term sentiment means more that we didn't even get that big of a drop on the near-term line that we got over here when we broke through the moving average by a pretty decent amount. But again, we're between 0 and 23. So by the time we got below 23%, we'll obviously be well below the moving average. So we would be in a intermediate pullback mode. Here's our rally today in the NASDAQ, which was our big winners you'll see later today. Intermediate line back up above 50 and rising, so dark green shading again, but still below the moving average. Still, remember, the biggest up days are below the moving average, right? So still below the moving average, still below that 23% retracement level. So still not turning things around yet, and we're still in this mode of which one's going to change, which one's going to give in, right? Is the Nasdaq going to turn back up and continue on with what would be probably a very short intermediate run, while the rest of these intermediate runs are finishing, or are the rest of these indexes that have really kind of done their own thing going to finally follow suit? You can see that long upper shadow on the Dow on Friday, and being that far above the 30-day moving average as well. Are all these indexes going to follow suit with what we're seeing on the Nasdaq and show a little bit more weakness? You can see if I activate these drawings and get them back up to up to the new high here again. That's where the 23% retracement level is, and anything between 0 and 23 is up or down is just noise, and that continues to be the case. All right, before we look at some other charts here, I invite you to subscribe to our YouTube channel. Mouse over this icon here on the bottom right corner of your screen. Hit the red subscribe button that pops out. There's also one down below if you're watching us on YouTube, down below the video, that red subscribe button. Click on that. That will notify you when all of our videos are posted. Also, while you're down there, hit that thumbs up icon. That tells us two things: that you liked our video today and that you want us to do another video again tomorrow. So quick way to give us feedback if you like our videos. If you don't like our videos, of course, you don't have to click on anything. You don't even have to watch if you don't like them. But if you do and you want to let us know, click on that one click down there. You can do that right now even while you're watching. Also comment. What did you get out of our videos today? What stood out to you? What questions or comments do you have? Post those in the comment section down there. Join our website at marketscholars.com. There's a link popping out there in the top right corner of your screen. Click on that link to subscribe to our site for free. You get access to our Market Outlook forum. That's our one free forum that we have on our website. You can interact with other market scholars who also watch these videos day in and day out. They're like in a message board format. Follow me on Twitter for more content in between the videos from day to day. There's my handle up here at DavidSettle42. And join our Market Outlook Facebook group that we've created. All right, if you're watching us on YouTube, on our website, come down here. You can see some of these things over here on the right. These are our classes that we have access that our paid subscribers have access to. Whether our premium or monthly subscribers, either one of these two, both of them have access to all of our trading rooms, as well as our Market Outlook live sessions. Every day I do the Market Outlook. I also do a live video on YouTube at 3:30 Eastern Time. This is where you can get to it. You can also get to it up here on the Market Outlook. We review. It's a trade review video. So if we go back on all the existing trades we still are in, on all the videos that I've done in these Market Outlook videos, and we continue to talk and manage them until we close them. So that's a very common, it's probably the most commonly asked for thing that I've had. And so that's the product we put together for that. Come down here, and like I said, our plus subscribers get access to that, and as well as our premium. Our premium subscribers get access to all those things, plus all of our class forms. In fact, if you click on pricing here, it kind of gives you a distinction of what you get. So again, all of our Market Outlook lives and trading rooms are available to our plus subscribers. Our premium get access to all of that, plus all these things. So you can kind of get an idea of what's, and it's actually for average per month, it's less than that $99 there. So check those things out there. Also, let's go back to this page here. While you're down here, hit that thumbs up icon or that heart right there. That opens up a new tab. And then when you're here, click on that like button. Also hit this thumbs up icon, opens up another new tab. You can hit the same thing, hit that like button right there. Again, that really helps us because the more engagements these posts have, the more people will see. The more of our followers will actually see our content because of how Facebook and Twitter work. It also benefits you because Twitter and Facebook will promote content in your timelines from the accounts that you engage with the most. We try to make it really easy for you to engage with us right here. All right, so now let's go back to the charts and take a look at the long-term chart, and you can see, again, very, very small Hakinyashi candle, right? So they're getting smaller, and that's not surprising. The PPO is very, very high. Like when you look at, on a relative basis, this kind of gives you an idea, the last 20 years, just how high the current momentum is for the S&P 500. We're in the 97th percentile. So the gap between the 50 and the 200-day moving average, which measures that long-term momentum, is and has been in the 90th percentile now for the last 20 years, for the last so many months, right, since the beginning of September, the end of August. So it's been a very, very, this entire run here from this point, when we had this intermediate pullback right here, and even before the intermediate pullback, when we got to the top of that peak, that first intermediate run, we've been on a very strong momentum ever since, relative to where we've been in the past. So that's what this is telling us over here. And again, 97th percentile. That's a very, very strong run. That's not surprising that we're having a hard time really kind of getting going here. We had a good little run to start off of this, and even that came from like a 5% move. But we had a good little run to start that, and now we're just kind of going sideways because we can't maintain the momentum. In fact, you could say the momentum is actually dropping here from what was a peak there at 8.43% between these two lines, all the way down to now 7.62%. It's gradually getting lower, and we're not getting when you look at the I don't know why it's not showing up. Here, let me just get rid of this. When you look at these candles, we're not getting a higher high right now. We're definitely not getting a higher close. We're not getting a lower shadow either. So that's a positive sign, but we're not getting the other two things that you look for. You can see how we got a higher close last week and a higher high last week, and no lower shadow. Great bullish week. Not the case so far this week. So. And we've gotten a lot of transition candles here lately. Again, not surprising when you've peaked on PPO and we're starting to fall down there. And if you look at like the RSI and the CCI, we're right in the middle. We're in between 60 and 40. That's neutral. We're in between 100 and negative 100. That's neutral. You look at the DMI, as I showed you before, we don't have that bullish run anymore. We've lost that bullish run. If you look at the trend strength indicator, we don't have a trend. We're still very noisy. We're between 0.5 and -5. So there's literally no trend right now, despite the fact that we're still progressively moving higher and grinding away. We're above the cloud. The price, the red line, which is today's price, is barely above where we were 26 days ago, which is what we're looking at here. And this kind of tells you again, no trend, no trend. So. Yeah, we're grinding up and we're going up, but we're not really going anywhere. And that's very indicative of a mature intermediate run. All right. So when you take a look at the three green arrows, you can see even there, the MACD is down, falling down. The histogram's rolling over. The stochastics is still above 80, but below its moving average. The price had fallen below its 8-day moving average, actually got above the 8. But now the question, but you can see the divergences showing up there. I showed you the divergences are showing up on this as well. That's just, again, the nature of mature runs. Doesn't mean we're going to fall tomorrow. It just means that there is a good chance that it's going to be hard to keep going up. As you can see, we did get a new high tag, the Arun indicator that I like to show you that kind of measures the high versus low tags. We did get a high tag that's on the right of the low tag now. So the green line is back up. That's not the case yet. For the Qs. The Qs, the high tag is still over on the far left, and that's not going to change anytime soon. In fact, you could see, this high is higher than these. But it's, once we get through another couple of weeks, then that's going to be the new high, and that's still going to be the low unless we get a new low again here relatively soon. So the low, the high is dropping, but you can see the low is starting to drop too. So we're not nearly as bearish. You can see the low. As the low is dropping, eventually that leads to a jump. That leads to a crossover in the green line up above, and you're back to being bullish again. So we'll kind of keep our eyes on that. But like I said, we haven't really got the bearish. We almost got a pretty good, decent bearish move there. The green line didn't fall all the way down, and we didn't. We kind of barely got one here. But the green line, the high tag, is back on the right side of the low tag on IWM as well. You can see there. There's our high tag. And you can see we're kind of progressing. We still got that point of control there on IWM. We still got that point of control here as well. We filled in the gap from Friday morning, that dividend gap there, but we still got gaps to fill. This one specifically from March the 9th that we haven't filled in yet on SBY, and it's also there. We have filled it in. We haven't filled it in on QQQ either. And we, and today we got a common gap today that needs to be filled in. This gap has been filled in now, which is one of the big reasons for the run that we had today, because that was a common gap. So we're going to fill in. You just see the volume is very, very low. So I wouldn't put a lot of stock into the rally today. As you can see, the volume really doesn't necessarily support it. When you look at today's volume and trading range, you can see the trading range was 4 points, just barely over 4 points. The volume was 73 million shares trading hands. So when you look at those numbers in context, 73 million shares is down here, so below average. 4 points is right down here, so also below average for the ATR. The ATR is kind of in the middle of this area. The volatility index bumped up a smidgen, but has since pulled back down today because options expiration is over with. So we're back below 20 again, down to 19. In fact, we briefly got below 19 today, and the volatility index itself is down relatively oversold levels. Not extreme, that's when you get below 80%, but still relatively low, which again suggests there's more upside potential for volatility right now than there is downside, considering where we're at. All right, so it was a good day today. Just to summarize that technical outlook, it was a good day today. Good bullish bounce. It's not a bounce enough to suggest that this is anything more than an oversold rally, especially in the tech names, as we saw. Biggest moves occur below moving averages. We're still below the moving average, so we can expect good up days in that type of environment. But we're not back to an intermediate run yet in that area. And that's kind of what you would expect if we're going to be bullish again. And we haven't had the exhale yet in the other areas. So we're still kind of in limbo to where we haven't pulled back enough to get a new run going on a broad basis, but we haven't pulled back at all on a broad basis to say that what we're seeing on the NASDAQ is over with. So we're still kind of in this limbo, and I still believe that we're leaning towards where there'll be a little bit of a pop in volatility, and the other indexes will follow suit with the NASDAQ before we finally get the clearing out of weak hands, so to speak, when you had two very long intermediate runs kind of back to back, that now we can get a good run going into the end of the year and into next year. So when that starts, it's not going to start tomorrow. It's not going to start this week probably, but again, you can see we're getting closer because of how mature the run is, and that's why in our class portfolio we're trading the way we are. As you've seen with our market outlooks, we've made a lot of really good bullish directional trades, but there's a reason we're hedged against those in our class portfolios from our trading rooms, and so that allows me to be as bullish as I am without feeling like I am buying or making bullish trades on a mature run and getting in at the absolute worst time and just getting hammered because I'm also not only making bullish trades, as you've seen with some of the neutral and bearish trades, and today you'll see a neutral trade again. So that's kind of my technical outlook. What do you think? Do you agree with that? Do you disagree? Let me know in the comment section below, especially if you disagree. What are you seeing? What chart or indicator are you using that tells you why you should be, or why you feel like you are a lot more bullish than I am or a lot more bearish than I am? All right, now let's take a look at what's driving the price action today. So we'll take a look at just today alone. So I will come here to our time frame and just look at today alone here. And you'll see that the Qs were the big winner. They rallied. They were the big winner to start the day. They peaked at the highest level of the day, over 2.25% gains before finishing down 1 2/3, or finishing up 1 2/3. Sorry, finishing down from its highs. S&P as well. But interestingly enough, bond yields fell, and that's why Qs did so well. As bond yields fell, bond prices rallied pretty significantly, along with real estate. And again, not the most risk-on type of move to see bonds doing as well as they are. The dollar did drop finally. The dollar's been on a pretty significantly bullish move. Here, let's pull up this chart and take a look at some of these different major asset classes. And we like to look at the dollar relative to the euro. That's the main counterpart, and you can see some divergences setting up here. And not really necessarily a huge divergence. It's a higher low point with higher lows on this as well. But we've been progressively getting some more bullish lows and holding support at the 62% retracement level with this engulfing pattern that we got today, engulfing Friday's move. This is just barely starting tonight's candle that will go through tomorrow. That's a good sign that we're holding support in this area. We had a morning or piercing line, piercing line candlestick pattern there, an engulfing pattern here, both of them at the support. Last time we only got up above, we didn't get above that 23% retracement of the long-term move higher, right? So that's this run. We didn't get back above that 23% retracement. I still feel like there's a potential moving down to 117.60 or 117.25 in this area here. So that's something to keep an eye on, as we have any kind of broader risk appetite move. As you can see, TLT has been so bearish, and it had this, basically it's had this kind of parabolic move to the downside. ADX about as high as it can get. Well, it looks like now we're getting an oversold technical bounce back up, coming off. We're back above the 62% retracement. We're moving back up. Obviously, that a rally in bonds and a decrease in bond yields, from these really, really high levels would be, they would be significant. They would be coincident with more of a risk-off type move. You can see we've talked about before too. The nice little run we've had in commodities. We've gotten the light pink shading in the yellow line. This little bit of a drop coming off of this cluster on commodities. If I move this up to that level there. Again, we haven't crossed the, as bearish as we were on Friday, we didn't cross the 23% level. A little bit of a harami here today, but we'll keep our eyes on this to see if we fall back through and start the pullback, right? We've gone pink because of the purple line cross up above 25, and the blue line's down below 20, while the ADX is still easily up above 25. So we've kind of gone pink here. You can see that happens a lot when you're on these strong bullish runs to finish off with a pretty decent pullback because of how high the ADX is, and that's kind of what I'm expecting here on this, is that we'll have a pullback into this 1560 level, at least that 1560 level, again on a broader risk off type move. That's where your top of your value area will be. Some pretty significant support in that particular spot. Finally, let's take a quick look at gold, because it's been kind of struggling with strength in the dollar here lately, and it's been bouncing back up towards the 38% retracement level. Again, gold will typically do well in a risk-off move. It's got this little trend line that's coming down. It hasn't quite broken that trend line yet. I think it will break that trend line when we are on, again, like I said, more of a risk-off move. And I don't expect on any kind of risk aversion that we get any higher than that level, 1850. And then at that point, if we do keep going higher, we'll just really grind our way up to the upside. Here is gold on the DMI. Again, very strong trend to the downside that's now moderating. So I think gold is done going down on this current run to the downside, at least to the degree that it has been. If you take a look at what's driving the price action today, you can see, here we go, XLK, XLC, XLY, all the biggest movers of the day today. That's your QQQ names, all outpacing, the only ones outpacing the S&P, everything else lagging behind. And look at what's lagging behind the most: financials and energy and materials and industrials. Those are all the ones that have been the big winners, right? When you look at from that low point of 924 of last year all the way up until now, this current intermediate run that when the Russell 2000 started its intermediate run. So let's go to a daily chart here. You can see those were the big winners: industrial, energy, and financials, and industrials and materials. They were the big winners. They're pulling back the most, and they've really, since the last couple of weeks, since March 12th time frame. So right in there. So this past week, starting on Monday and working our way down, energy's really struggled the most, and financials are down 3%, and the broad market is flat during that time. And today's rally in these Q names, again, it's been a nice thing because it's been oversold, but that's really what it is. It's an oversold technical bounce, but not a trend-changing bounce back to those QQQ names. We're just seeing weakness in these areas. We've been kind of waiting for the weakness to occur in those particular sectors. If you take a look at the 12 grid for all those different sectors here, they're all here in the middle. You can see they're just now starting to pull back towards moving averages, energy especially. And then you can see real estate and XLP and XLV kind of bouncing off. And you can see XLK, so below its moving average. XLY kind of with a falling moving average, but kind of at it. Had bounced back up to it. And then XLC has been kind of on a nice little run and continuing that trend. Remember, it's got some interest rate sensitive areas in there as well, very similar to real estate and utilities from a telecommunications standpoint. So for our trade idea of the day, I wanted to take a look at something in that XLY category that has been very bullish. And, from a long-term viewpoint, you can see Disney very, very bullish, very high PPO, about as high as it's been. Again, if I look at it on its relative perspective here, there we go. Go back, as far as we can. You can see obviously the 98th percentile on a 5-year time frame, but if I go back 20 years, still, this is about as bullish as Disney has been on a long-term level. So very, very strong little rally we've got going on. If you take a look at like RSI and CCI forward, you can see how we've been progressively getting lower and lower. So we've been starting to grind our way to a kind of a sideways action. We've been very bullish. We've been grinding with some continued strength in that bullishness, and now we're really starting to falter. And you can see in the Bollinger bandwidth as well, also really starting to falter down to a very low bandwidth. So not really going much of anywhere right now. And all up above this 23% retracement, all around some volume here over the last few weeks, all in this area, well above the value area. So well above the value area. The top of the value area is actually, for the 1-year chart, is at the bottom of the retracement zone that we have on this current intermediate run that we're on. So there's some pretty decent support in that area, and you can see too from a 2-line version, we've been so bullish, but you see how the MACD has been converging. The MACD histogram is moving towards 0. The stochastics is between 60 and 40 now. You take a look at the market forecast for Disney. You can see we've been moving down too on the intermediate line, dropping below that market sentiment, and just really kind of stalling in this area. So that sets us up for the type of trade that we like to do here, and do an iron condor spread where I sell near the 20 delta. So sell the 182.5 by the 180, sell the 205, sell the 205 by the 207.5. This is what it looks like there. So those lines are my break evens. That's what my blue line is. So I've got my top blue line just above the 0% retracement level. I got my bottom blue line just below the 23% retracement level. So and we just had earnings here, so as long as we continue to be noisy up and down between now and April expiration, that's how we make our money on this trade. So taking advantage of a stock that's been on a really, really good trend, like most of the market here lately, since the beginning of November, but it's now kind of maturing and stalling, and we'll take advantage of that stalling by selling verticals on both sides of the current market. All right, so that wraps us up for today. You've heard from me now. Now I want to hear from you. Use that link popping out in the top right corner of your screen. That takes you to our Market Outlook forums. Open up any new threads there with any questions or comments you have about anything we talked about in the video today. And remember, like I said, all the free subscribers get access to that forum. So let's keep this conversation going in between videos. As always, thank you very much for watching. Remember to subscribe to our YouTube channel. Hit that thumbs up icon down there on YouTube as well as on Twitter and Facebook. Like our post there, and then comment on the videos. Have a great rest of your Monday night, everybody, and we'll see you all next time.